You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, welcome back to TWIFO, This Week in Futures Options. Program where the name pretty much says it all. We break down the week that was, and indeed still is, on the futures options front. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks have been mainlining out there. Hope you're having a good trading week. At the very least, keeping your head above water out there. These are some wild times. So you would be forgiven if maybe this is a little bit too spicy for you, but we know a lot of you folks were preaching to the choir out there. A lot of you folks are in and enjoying a little bit of vol. It gives you some intraday action and some opportunities to take some nibbles maybe at levels in certain assets that you couldn't get access to earlier. So a lot of intriguing things out there as long as you're keeping yourself risk mitigated and keeping some powder dry to pounce on those opportunities when they present themselves. If you want to pounce on over into the pro, only one place to go to check it out. theoptionsinsider.com/pro is the place to go to learn more as we dive into a Just the Facts, ma'am edition of TWIFO with a little bit of the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report. By the way, if I sound a little bit different this week, it's because I am beaming to you from the Southern studio. I will be down here through the rest of the week, but back in the Chi-Town studio for TWIFO next week, listeners. And there has been a lot of moving and shaking in these markets since our last episode. Firing up the chart, which you folks can see over there on social media, listeners. If you give us a follow at Options, we put it out right before the show because we like you folks. We like giving you access to free premium data. And that's exactly what this is. This is one of the premium charts over there at Bantix. But because we like you folks, we make it available to everyone free of charge. And if you looked at it right now, you would see a whole mess of green on the screen since our last episode last week. In fact, we could do a bottom 5 and probably a bottom 10 if we stretched. And that's really about it. Everything else pretty much green over there at CME this week. So we don't see the markets this biased in one direction very often, which is kind of interesting out there. So since there is not a heck of a lot of dark side, I guess we'll start there first. To the dark side we go. And again, we could probably do a bottom 10. In fact, number 10, if we extended it all the way out there, is the E-mini, is the S&P 500. It's kind of pretty much unched on the week, but technically it's off 0.07%, which makes it technically red and also shows you how little it takes to break into the red on our screen this week. And then break into the top 10. 0.07% to the downside gets you into the top 10 this week. That shows you how little red there is out there at CME this week. By the way, number 7 is the NASDAQ, off 0.89%, if you're wondering. Before we break into the actual bottom 5 this week, the dark side bottom 5 listeners. Number 5, we're going out to the tech sector of the S&P. No secret, this sector has been under a little bit of heat of late, off about 1.26% since our last show. Number 4, from the S&P, we go to the Dow, off 1.52%. If you're curious, it was number 23 in the same direction last week. We had a lot more red on the screen this time a week ago. It was off nearly 4% last week, 3.9%. Number 3, to the consumer discretionary sector of the S&P we go, off 2.34%. So numbers 5 through 3 of our bottom 5, all equities all the time. In fact, if you expand to the top 10, it's mostly equities out there. Number 2, we go from the world of equities to the land of FX. It is the peso USD, off 2.35%. And our number 1 dark side mover for the week, our old pal Nat Gas, off 6.89%. It was number 1 in the same direction the week before, off 14.16%. So taking a cool 20% plus hit off the top over the last couple of weeks out there in the Widowmaker. All right, to the light side we go. And we could obviously do a top 30 or 40 if we wanted this week. But we won't, unless we wanted to expand it to number 29 to find the Russell 2000, up 1.45%. If you're wondering, I was number 15 in the other direction last week, off 5%. So some interesting moves out there on the equities. But let's get to the actual light side top 5, shall we? Take a guess. What do you think is in our top 5 movers this week? There's a few out there that you might expect that are actually not in there, which may come as a surprise to you listeners. In fact, you might be expecting gold to be in the top 5 this week, in which case you would be disappointed. It actually looks like gold is probably about number 12 or 13. It's up 4.2%, so that's a good week, but not enough on this week to break into the top 5 listeners. It's going to cost you 5.63% to break into the top 5. That gets you to our old pal WTI, gaining some juice back this week after taking a lot of hits, a lot of body blows of late out there in WTI. In fact, it was number 3 in the other direction last week, off 11.02%. So getting about half of that back this week, listeners. And then keeping the theme in energy. In fact, there's going to be a lot of that in our dark side, or I should say light side top 5 listeners. Number 4, we got the energy sector of the S&P, up 5.67%. That also was number 2 in the other direction last week, off about 11.57%. Number 3, keeping it in energy land, it's our old pal RBOB, or as we say in the intro to our Futures Rundown show. What the heck is RBOB anyway? But number 3, listeners, it is RBOB, up 5.68%. Listeners, it was number 5 in the other direction last week, off 9.89%. out there. So a little bit of interesting action out there in good old RBOB. Then we expand from energy. We go into the land of the metals, and spoiler alert, we're going to stay there for the rest of the top 5. Number 2, we're going base, though. You might have thought, again, gold would be lighting up the tape, and it's having a good week, but it ain't no copper this week, listeners. Copper up 6.5%. And then the big dog to the light side this week, not gold, but keeping it in the shiny stuff, it is palladium, up 8.13% this week. So an interesting light side top 5, maybe not all the names you would have expected, which is kind of fun, which is the reason we do the show at the end of the day, listeners. All right, let's keep things rolling out to the land of CVol, listeners. What is lighting up our tape on the volatility front this week? Remember, you can run these reports for yourselves, CME Group and CVol. Type that into any browser you're rocking. That will get you to the CVol dashboard. Once you're there, if you want to line up with our show, go to the 1 week high-low range. Go to the aggregates tab. We're looking only at the aggregates. You can obviously do deep dives into any complex you want. We're just looking at the aggregates. It is only a 1 hour show at the end of the day, listeners. And then we're going to, I like to sort it by a grouped list, but you can do however you like. You do you at the end of the day, listeners. Looking at the CVol report for this week, again, kind of a bit of a mixed bag. We start off spicy, pinning the needle to the upside. Then we drift to the other direction by the bottom half of our CVol here, listeners. So let's start at the top. It's the metals aggregate CVol, 26.38. This is an explosive move, up nearly 6 points just today. That's a huge move for metals vol. So metals vol getting quite spicy out there. You know, we're used to names like gold hanging out at like a 16, and gold obviously is the king of the metals. So when we see the aggregate metals CVol at a 26 and gaining 6 points in one day, that's unusual. 26.38, so not quite the high for the week, but pretty darn close. The high was actually nearly 28, 27.92, and the low was 20.43, so hell of a range on metals CVol out there as well. Again, we don't see that very often. So a very, very interesting times out here in the metals market, and that reflected in the vol. Huge action in metals CVol this week, listeners. Below it, we have the aggregate commodities CVol. That's at a 40.19, gaining about 2 3/4 points just today. On the week, this is one now we're starting to drift lower in the CVol. The high was 43, the low 37.5, so we're close to the middle of that range there, listeners. And then we go down to the aggregate energy CVol, and we're starting to drift the other way. 59.46, up about a point today, so getting a little bit of juice today, but close to the low for the week. The low was 58.56, so about 0.9 from the low. The high 63.54, so another thing, an impressive range on all of these we're seeing this week. Below it, we go out to the realm of FX CVol, 11.51 today, up 0.31 today. On the week, again, you don't see a lot of vol in FX, so FX CVol having a range of 11.2 to the downside and 13.91 to the upside. So 2.71 point range on the week for FX CVol, that's a lot. So again, reflecting, if you weren't quite convinced by the massive swings in the equities or the massive explosion in the metals or some of these other assets, if you weren't quite convinced that we were living in some nigh on unprecedented markets together, then look at the range we're seeing in the CVol. So you pick your product out here. It's quite the wild week out here. Below it, we have the ag products, listeners, 1866. Now we're moving in the other direction. Now we're moving in the vol collapse direction, off about 0.26 today. That is the low for the week. The high, 20.42, so they are taking it to ag vol this week. And below it, we have the treasuries. Treasury price vol, 7.9, off nearly half a point just today, 0.44 today. That's a huge move for treasury price vol. You're starting at a base level of around 8, giving up nearly half a point in a day. That's a big move, listeners. That is the low for the week. The high, 10.13. So again, we don't see nearly 2 1/4 point ranges in treasury price vol every week. Usually Treasury vol just sits there and does nothing. So nearly 2.25 point range just in a week, nearly half a point move just today. Yeah, we are flirting with some historic territory here. And below it, we have the Treasury yield vol. You know this one's a beast, and you know it's moving quite a bit if everything else is moving. 143.21 right now, off 7.01 points just today. That is the low for the week. The high, get this, listeners, 177.38. So we're talking a 34.17 point range on the week, listeners. So wild stuff out here. If you weren't convinced that we were having some historic markets right now, then just fire up the CVOL report and you could see for yourself. Meanwhile, it is a Just the Facts, ma'am edition, so we have time to run through a complex or two out here and looking at what's lighting up our markets out here, listeners. I was kind of surprised that gold didn't make it into the top 5 this week. I was also equally surprised that it was usurped by WTI. So to the world of energy, we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everyone, welcome to the wonderful, the often topsy-turvy, certainly this week, world of energy out here, listeners. Remember, you know where to go to find all of these reports for yourselves. CMEgroup.com/TWIFO is the place to go to kick the tires and light the fires. Once you're there, you're going to go into that asset class drop down. Going to go 3 slots down to energy. And then from there, you're going to see product category. You're going to see crude oil. And we're going to go into WTI, obviously. As we're kicking off the show, 64.09, up 3.19 points, or about 5.25%. So again, pretty much all of that move in WTI has come in since Monday. So very near-dated upside move out here, which again, we're all living day-to-day, tweet-to-tweet in these markets. So not surprising that we're seeing a fair amount of action very recently out here in WTI. If you're wondering, is it an explosive volume week? The answer right now is actually no. I mean, it's good. It's better than an average week. We usually expect 400, 450. Closing in on 600,000 contracts right now, 576 to be precise. Remember, it is also a truncated trading week, so Good Friday kicking in tomorrow. So what we see at the end of the day today is pretty much what we're going to get for the week. But 576, nothing to sneeze at. Of that, 45% listeners going away in the June contract that has about 28 days to go. So we'll hang out there. What is June vol in WTI? You might be asking. It's a 37, pretty much even. They're taken to the vol today, off 7.63 points just since Monday. So they are crushing the vol out here, listeners. Skew-wise, what are we seeing? You know, if you had to say to yourself right now, WTI close to a 65 handle, 64 and change. Which way would you be leaning in WTI right now? Would you be biased to the downside or biased to the upside? I got a feeling I know which way you're going. It's probably to the downside, and that is reflected in our skew, listeners. The puts are 13.6% bid. This is the juiciest I've seen them in a while. Certainly when compared to last week when they were only 3.3% bid. So catching over 10+% to the upside on these puts just in the past week. The calls last week, 1.3% discounted. This week, nobody wants the calls. Nearly 10%, 9.9% discounted are the calls. So a 13.6% bid to the puts, nearly 10% discount to the calls. That is heavily biased to the downside, listeners. That is screaming that all the interest, all the concern is to the downside. Very equity reminiscent out there, listeners. It's also probably reflective of the fact that our number one most active contract out here in WTI are the double puts, the 55 puts in June. They went up about 26,500 times this week. The big day actually today. So double puts out here in WTI trading half of their volume just today, 13,300, which is kind of interesting. So now I'm intrigued, listeners. Let's go look really quickly and see if we can find what these puts were trading for out here on Globex. Looks like there was a June double 54 half put spread that traded nearly 10,000 times today for a nickel. So, there we go. That's of those 13,000, 10,000 was in a nonsense $0.50 wide put spread for a nickel. So I did not expect that, which is why we crunched the numbers at the end. I'd love to see the price for these double puts straight up here, listeners. Let's see if I could find those. June 95s, if you're wondering, also traded today about 5,300 times for 6 cents. 95s. That's an intriguing one out there. So that's why you crunch the numbers. Here we go. June 60 puts, maybe a more relevant strike. $1.33 trading today, over 1,000 times out there this morning. So that gives you some sense. And the 50 puts are trading 20 cents. So do the math, try to interpolate what the double puts are trading halfway in between those two, listeners. But interesting stuff out there. 55 puts. Would you be a buyer or a seller of those bad boys out here today, listeners, at just pure strike level out there? Or is that maybe too far to get by June expiration in 28 days? So there is some interesting prints going up here, listeners, though. If you wanted a little bit of upside, maybe you said, all this downside, maybe it's a little bit overdone. I want to play to a little bit of the upside. Well, then how about these SEP pars? These SEP 100s. Are those your Huckleberry listeners? Because they traded quite a bit this week. Looks like about 16,700 times. It looks like there was a SEP 90 par. Oh, it was a 1x2 that traded this morning 2,300 times. So guess buying one, selling two. They did it for a net price of a dime credit. Interesting. So again, that's why we crunch the numbers out here, listeners. 1x2. Also saw the SEP 80 par 1x2 going up about 500 times today. So someone loving that 1x2. I'm assuming buying one, selling two? Because they're getting it off for credits, or in the case of the 80 par, they got it off for a 20-cent debit. The SEP pars by themselves, listeners, if you were just curious what they're going up for, 22 cents by themselves. So, SEP 100 strike, listeners, that seems like a bit of a bridge too far, but you never know. You have a whopping 120 days. That is an eternity in a market where we're living tweet by tweet, listeners. Would you be a buyer straight up for 22 cents? Would you be buying one, selling two in the 80 or 90 range out there? I mean, net short units in any of these products is that way lies madness sometimes. Seems like some folks are up to that out there. So which way do you prefer? In which case, if you're doing it, you're paying about 20 cents for the 80 par or collecting about a dime for the 90 par 1x2s, listeners. Funky stuff going up out here, which is why we crunch the numbers, listeners. But I did mention I was kind of surprised by gold. It is slightly outside our top 5 this week, listeners, coming in at a number 8, but I know it is top of mind for a lot of you out here. So before we get out of here with this Just the Facts, ma'am, edition, let's head on into the shiny stuff in the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. Go into that drop down, pop out of energy. You're going to go down pretty much to the bottom of our list, which is metals. Then in product family, you're going to go precious. It's gold. By the way, if you're wondering why not palladium is top of our list, palladium does very little options paper, so not really worth crunching. Nothing compared to gold, which is having yet another banger week. 500,000 contracts, almost exactly 501,000. So hitting new records pretty much every day. That's going to carry over into the options volume. And we are certainly seeing that roughly 2x the volume we normally expect every week out here in gold, if not more. So hot times out here in gold. Are you riding the gold train to the upside, listeners? Are you like some of our guests of late on this show and on the Futures Rundown, which you should be listening to if you're listening to TWIFO? Very much the sister program to this one. Some of them have been fading the metals of late. Obviously, on silver, it's worked out all right. On gold, not so much. Are you riding this extremely spicy gold train? Either way, listeners, gold coming into the start of the show, 33.31, up 86 handles, almost 87 just since Monday. Let me say that again. Up nearly 87 handles, or 2.7%, just since Monday. We don't see that very often in gold, listeners. So again, if you needed more data points that we are in some very rarefied territory in the markets right now, there's another one to add to your quiver. Also, 500,000 contracts in gold. You also know something's afoot when we're seeing that. Of that, nearly 34%, everyone's obsessed with 0 day. Not in the metals right now. They're going out to June. 40 days to go. What is the vol in June gold? A pretty spicy 2112. Great album. Also off about 2 points, I should say, on the week out here. So interesting stuff out here for gold vol listeners. Let's see. Skew-wise, we expect the bid to the upside, but then again, we've seen an explosive move to the upside. So are the gold bugs just exhausted? Are they tapped out? Can they not possibly buy any more upside? Or maybe they're thinking there's more room to run. Well, let's find out. Yeah, the calls are still bid. A little bit less so than you normally would expect in gold, but still got a bit of a bid. About 5.9% bid last week. This week, even though we continue exploding upward through strikes, they're still bid 6.4% bid. So you might say, well, that's not much. They're kind of about the same as they were last week. Remember, factor in that that skew usually when you're moving to the upside, though, that vol tends to collapse. So factor that in, and it's up even more. So yeah, they're still maintaining a little bit of a bid. It's not quite as explosive as you've seen in the past, but it's certainly respectable. And to the downside, folks still don't seem like they want a lot of puts, which is also interesting. You'd think if we were heading for the turnaround, you might see a little bit of a bid to those puts. Last week, they were 2.3% cheap. This week, 4.5% discounted. So folks are still buying calls and selling puts, at least in June in gold. Now look at the rest of the term structure. That pretty much appears to be the case as well. All the months and expiration cycles previous to June are in about the 4% bid range to the upside and about 3 to 4% discounted range to the downside. Go a little bit farther out, now we start to see some more of those traditional bids we're used to in gold raising themselves up, including December. The calls in December, listeners, 9.1% bid, and the puts 3.7% discounted. So that's a little bit more along the lines of what we've come to expect from the king of the shiny stuff. But either way, fascinating stuff out here in gold of late. Congrats to all of you who have been riding this train to the upside. Let's go out. What is the big dog out here? I said we're at a 33.31. Usually in gold, the big dog is some far out of the money, down the road call strike. And not this week, maybe reflecting just how aggressively gold is moving. Remember, 87 handles to the upside just this week. We are blowing through all the strikes, which is probably why it's the 32 halves in June that are taking the top spot, a now in the money strike. And also, about nearly 14,000 of those, 13,500. Also why paper has been closing them pretty much all week long, because they're blowing through the strikes. And if past is prologue, folks bought those and they were out of the money calls a week or two ago, and now they're dumping them. That's pretty much how it works in gold, and we're seeing that out there. Number two, though, is maybe more along the strikes you would expect in gold. A little bit out of the money, a little bit, shall we say, optimistic. It's the 3,500s going up nearly 10,000 times this week, 9,900 times, the almost equal paper Monday and Wednesday, 3,600 pretty much each. 1,700 today against an OI of 7,300, and about close to 1,000 on Tuesday. Let's see. June 35. I like pulling up a few prices for you out here in gold. The SEP 3,500s traded for $117 today, 3,500 times. But we are going out to the June 3,500. Let's see if I can find those bad boys. July 3,400s traded for an average price of $95 today. Let's see, listeners, doing this on the fly. Looks like we had the June went up. Part of it was a 3,600 call spread, so maybe some folks are already rolling The 3500s, either way, that went up for close to $17. I'm trying to find the 3500s by themselves for you listeners so I can get a little bit of price action for you. Let's see. Give me 3600s. 3600s, if you're wondering, listeners. $24.30. Let's see if the option gods will smile. I just want the 3500s. Listen, that's all a man wants. You know, it doesn't seem. I could scroll the rest of the show here, listeners, to find the individual prints out here for you. But some fascinating paper going up, nonetheless, out here in gold this week. Let's look really quickly to see if we see any other interesting and or aberrant prints. How about the 3800s going up in November? They went up about 1,400 times this week. And if you want some near-dated flow, we've got the 3400s expiring in 7 days in May. They traded again 5,600 times. The big day was Wednesday. 3,400 going up. Looks like paper bailing on those, which makes sense. You probably bought them a little bit lower. You're taking your profits, getting the hell out of Dodge. 1,000 trading today against a remnant OI of 2,200. That's going to do it for this Just the Facts, ma'am, edition of TWIFO. No, we still, even though we're beaming in from the Southern Studio, we still squeezed in a couple of big products, and we talked about all the madness out there in CVOL. A lot of great data points today, listeners, to just remind you, be judicious out there with your trades. These are nigh on unprecedented markets we're all living through together, so keep things risk mitigated. If you're not comfortable trading, by all means, keep some powder dry. Wait for the opportunities to present themselves. I say it all the time. I'm going to say it again this week. I do truly mean it. These are wild markets, listeners. So stay safe out there.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.